Cathie Wood just dropped $20 million on TSMC during the panic. Here's why that matters for Nvidia and AMD. Let's break down what Ark Invest actually did on Wednesday. Subscribe to Taiwan Tech Pulse. We bring you what Taiwan's own analysts are saying, before Wall Street catches on. Got a Taiwan tech story you want us to cover? Drop it in the comments. When the broader tech market was selling off, Ark was buying, and they made some really interesting moves. The biggest trade? They added $20.1 million to their TSMC position, according to their daily trade notifications. That's a lot of money going into a stock that's fallen about 7% in the past month. But here's the thing, Ark isn't buying TSMC because it's cheap. They're buying it because the long-term technicals are still intact. And the company's growth score sits in the top 85% of the entire market. For Nvidia and AMD investors, this is a signal worth watching. TSMC is the single most important manufacturer for both companies' advanced chips. If Ark thinks TSMC's dip is a buying opportunity, it suggests the AI hardware demand story isn't over, it's just taking a breather. But Ark didn't stop with TSMC. They also bought about $14.5 million worth of SpaceX stock across 4 of their ETFs, ARKK, ARKQ, ARKW, and ARKX. That follows a $12.2 million purchase just the day before. Now, SpaceX isn't publicly traded, so this is a rare window into what Ark thinks of Elon Musk's rocket company. And it comes at an interesting time. SpaceX reportedly has about $26 billion in short bets against it, with roughly 35% of its float being shorted. That's a massive short position for a private company. Ark also added about $540,000 of Tesla, plus small positions in Kratos Defense and BWX Technologies. But here's what they sold, and this is where the story gets interesting. They dumped about $1.1 million of Amazon and another $1.1 million of Alphabet. They also reduced positions in Robinhood, Shopify, Block, and Roblox. So the pattern is pretty clear. Ark is rotating out of consumer-facing tech and doubling down on deep tech with a supply chain angle. TSMC is the linchpin here. It's the Taiwan-based manufacturer that makes the most advanced chips for everyone, from Apple's A-series processors to Nvidia's H100 and B200 AI accelerators. When TSMC stock drops 7% in a month, it's not because the company is in trouble. According to analysts who track the Taiwan supply chain, it's more about sector rotation and short-term market noise. The company's fundamental position as the world's leading semiconductor foundry hasn't changed. If anything, the AI build-out is accelerating demand for TSMC's 3nm and upcoming 2nm processes. For US investors, the key takeaway is this: when Cathie Wood buys TSMC during a dip, she's betting that the AI hardware cycle has a lot further to run. And that's good news for anyone holding Nvidia, AMD, or even Apple, because all of them depend on those Taiwanese fabs. The bigger picture here is that Asia's tech supply chain is where the real action is happening. Wall Street might be worried about consumer spending or ad revenue, but the people who watch the factories in Taiwan are saying something different. They're saying the chip orders are still flowing, the capacity is still tight, and the long-term demand curve is still pointing up. That's the signal Ark is following, and it's worth paying attention to.